News and Views on Salam Media with me, Julie Ali, and our first interview for the morning, a pretty important one, I think, very especially for you and I as taxpayers. I'm kind of wondering how this proposed wealth tax, if and when it does happen, will impact on you and I. Undoubtedly, it will mean good news as far as the marginalized in the country are concerned. But let's unpack with the tax expert, Jashwin Baijoo. A very good morning to you, Jashwin. Welcome to the program.
Morning, Julian. Welcome to the listeners. So,
Okay, let's start off by looking at this issue. We understand that experts are predicting uh, a proposal by SARS. Obviously, SARS is refocusing on wealthy individuals in the country, if any of them are still around,
mm,
and priming taxpayers for the introduction of a wealth tax. What's this going to look like? What are the implications on you and I? What are the implications on the wealthy themselves?
Julie, we must remember that discussions on imposing a wealth tax have been rife in the preceding years. It's not something new. And in light of SARS teaming up with National Treasury and the NPA, it's no wonder that they're actually clamping down on higher net worth individuals. So while we do note that these very wealthy individuals generally do have more complex tax affairs, which in most cases does require the attention of a tax practitioner, a specialist in the field of some sort, it's not always the case. But if we critically analyze a notice that was sent out by SARS last year, and this is the welcome notice, welcoming these high net worth individuals to the dedicated high net worth individual unit, as was alluded to by SARS in the 2021 budget speech. It's an important point to note as the notice goes a step further, specifically assigning these very wealthy individuals with a dedicated relationship manager in order to assist in navigating the proposed complex structures from the high net worth individual's tax liability. But from a perspective of precedent, mere months before that welcome notice was issued, another notice went out to taxpayers, indiscriminately so, which requested a full disclosure of offshore assets, including investments, property, and offshore bank accounts. Now, in contrast to the statement made in the 2022 budget speech pertaining to the detection of non-compliance and even fraud with the disclosure of specified assets, where the value is estimated at about 50 million, both assets and liabilities. We see a stark contrast from what started as the search for a needle in a haystack, asking for full disclosure of everything, to something that is so honed in at this stage. And this is because SARS is now receiving information under the automatic exchange of information with around another 150 other jurisdictions and intends to initiate a review of these taxpayers' affairs, but are first giving these high net worth individuals the opportunity to voluntarily disclose. As much as this comes across as, it's an open card, these guys should go for it voluntarily. It's actually SARS carefully performing their due diligence, and the severity of implications of non-disclosure can be quite fast. We must bear in mind that the tax law amendment bill that was passed about 2 years ago actually now includes willful and negligent non-compliance, and the knock-on effect of that is basically that the revenue authority coupled with the NPA are then at liberty to actually prosecute these taxpayers. And what we have seen in practice is basically the higher value the taxpayer, the higher value the assets, the more publicized it is, firstly, if there should be a prosecution or an alleged tax conviction or tax charge, but also the more severe the the punishment, really.
Okay, you've shared a lot of information regarding wealth tax is concerned, lots of questions then emanates from that. You mentioned a figure of 50 million rands. Are we then suggesting that people that are have assets, fixed or otherwise, from 50 million rand upwards are
Mhm.
the actual band of people that are being targeted here? People that have assets below that amount, or earnings below that amount, do they then fall out of this band, and they kind of breathe safely for now?
So, Julie, that is basically a double-edged sword. It's a yes and a no. Currently, the threshold has been set for the specified declaration of assets and liabilities at 50 million. However, this is still proposed and forming part of SARS's proposal. The Revenue Authority are at liberty to say, okay, not enough people in this bracket, let's drop it to 40. And then let's drop it to 30. Let's drop it to 20 million. So currently, in terms of the proposal, and without the wealth tax actually being concretely implemented or implemented to any extent, the provisional threshold is set at 50 million, sure. And that is your specified assets, liabilities, and for the purposes of the 2023 tax year returns. But that can change at any time. There could be a new proposal that comes in the midterm budget speech that says, okay, we're reducing that to assets over 30 million. You've got to declare specified assets and liabilities.
Okay, so that's where we're sitting at the moment, 50 million being the threshold.
That's correct.
We also know a lot of these large corporations in South Africa have moved a lot of their top executives out of the country,
Mhm.
possibly operating from Dubai and other such possibly tax haven countries. How are they implicated? Because we know what CEOs and COOs and top executives. Earning power has been here in
Mm.
South Africa. They're above the 5 million per annum, or let's say 2 million per annum. How are they impacted, knowing that they live in those countries? Are they meant to be filing taxes here in South Africa on a regular basis, and what's the impact on them?
So this is a question that actually speaks to their residency. So your actual residency and nationality and your tax residency are two very different things. With regards to these individuals moving offshore, in most cases, they are still liable to submit tax returns in South Africa, even if just from a compliance perspective. And the reason I say this is because most of these guys are considered expatriates. And as an expatriate employee, you are able to claim the Section 10102 exemption in South Africa, which in essence means the first 1.25 million of your worldwide income is exempt from tax in South Africa. But further than that, should you be in another jurisdiction, and let's use Dubai as an example, and you are registered and paying taxes there, you may then utilize those foreign tax credits and submit those to SARS to offset against your tax liability in South Africa. But from a perspective of the high net worth individual, the ultra high net worth individual, because of the clampdown, not just being SARS, but also Treasury and the NPA, this knock on effect is not just limited to high net worth individuals within South Africa. No, it extends to high net worth individuals who have some sort of interest in South Africa, such as a rental property or a company in which they hold shares, etc. And whether they're in SA or they're offshore, the consequences are still far reaching. And we've actually seen it that it's to the point where our senior management team is currently flying out. They are currently in the UK and then shortly the Netherlands to meet with these expats and these high net worth guys to properly structure their tax affairs and plan it to ensure they are compliant on both sides.
Okay, then we talked about full disclosure. Do we truly expect these people to disclose all of their assets? knowing that they will be taxed on all of that, whether it's offshore assets or still in the country. A lot of these high net worth people in that band own property all around the world, very especially in South Africa as well. It may be their first and second homes. It may be, buildings, commercial property, etc. How does that then play out in terms of them being taxed? Added to that, this undoubtedly is further going to put pressure on high net worth individuals. We do know that the exodus from South Africa started a long, long time ago.
Mm.
And I think you indicated to me off air that quite a number of people over the past 2, 3 years have also immigrated. And there are a number of factors apart from falling into that high net worth band. I guess the situation in South Africa as well, the crime, the corruption, the unemployment, the fear of what's to come in the near future in South Africa.
Yeah, so Julie, just in from a perspective of ultra high net worths leaving South Africa, what we've seen in the last fiscal period is other countries showing an increase in ultra high net worth individuals. And this could be attributed to a knock on effect of COVID-19, where people have had to become very entrepreneurial. But at the same time, we've seen a 7% decrease of ultra high net worths in South Africa. And this is coming since last year's budget speech when, the high net worth individual unit was introduced, and basically the proposal really started taking shape for this wealth tax. It's been previously alluded to, but now there's a dedicated unit at SARS to focus on these high net worth individuals. So that's the first point to be addressed. Secondly, with regards to the high net worth who has 10 properties in 10 different countries, SARS has given them the opportunity to come clean, voluntarily become compliant. But at the same time, SARS has an automatic exchange of information with various other revenue authorities, which means, let's say, 9 out of 10 of those countries where there's fixed property, SARS is already aware of it. And they're just waiting for you to disclose or not disclose, which is a very smart move strategically on the part of the Revenue Authority, as their strategic objective is actually to obtain voluntary compliance from taxpayers. And where there is no voluntary compliance is very much where SARS steps in. And together with whichever revenue authority it may be it the KRA or the IRS, etc., they are empowered to conduct a joint audit of a taxpayer. And that can be any taxpayer, really, not necessarily limited to high net worth individuals. And that is how SARS will gain access to all of this information. So, aside from the various notices they're actually sending out to the high net worth guys and even your average taxpayer regarding offshore structures, specified assets, etc., they do have that channel open with other revenue authorities in other states to actually access that information of their own volition.
If you don't disclose voluntarily and ignore requests from SARS to disclose or to pay taxes owing to the country, and let's assume you're out of the country, can SARS then repossess properties that you still own in South Africa, assets that you own in South Africa, in terms of a penalty? And what about those that do come forward voluntarily? Would they then enjoy some sort of a rebate for being open and honest, playing open books with SARS?
Let's start with the quicker answer. The guys that come through voluntarily, you're not getting a rebate or a benefit necessarily, but you're not being penalized. And that's basically it. You will pay your taxes that are due. As a high net worth, there's no concession for you really. You've got the funds on hand, or you've got the properties on hand to actually sell and get that liquid capital. Very different story for the normal taxpayer who gets hit with a 1 million rand liability and they can't afford it. There's debt relief mechanisms there. be it for companies or individuals, compromise of tax debt, a deferral of payment, etc. But now the more complex discussion is on the non-compliant guys. So yes, SARS is at liberty to attach your fixed property, your movable property. They can come to your house, open your garage, and take two of your cars. And I say this because, firstly, due process must be followed. So, as an example, and to very briefly run yourself and the listeners through the process, the liability is accrued and is confirmed by issuance of an assessment by SARS. In this instance, let's call the liability 5 million Rand over the last two fiscal periods. SARS will then give you until the date provided on the statement, which is typically until the end of the following month, to make payment in full of the liability as per the statement balance. Should you fail to do this, you will get a gentle reminder, maybe an SMS or a call. Should you still fail to adhere to this, you will get a final letter of demand. The final letter of demand permits the taxpayer only 10 business days in which to respond to SARS in some manner or form. And should that 10 business days lapse without any action from the taxpayer, SARS may then implement collection measures. Those collection measures range from a judgment being taken against the taxpayer, which in essence is a senior SARS official taking a written statement down to the court and getting it stamped. The knock-on effect of that may be possible blacklisting on all credit bureaus in South Africa. And at this stage, with the free flow exchange of information, there could be international ramifications, but that is
Absolutely.
still a possibility and it's very much up in the air. Aside from the judgment, SARS may then attach movable property, immovable property, and by virtue of a third party appointment to the taxpayer's bank, they can delve directly into the taxpayer's bank account and siphon any funds from there in settlement of the debt.
Okay, final two questions. How will this impact on trust funds of the super wealthy? This is a way of them also ensuring that their future generations are taken care of. I'm kind of wondering about the impact on this particular issue.
So, a trust, like a company, is considered a related entity as pertains to an individual. Although it has a completely separate juristic entity, because of that relation, SARS are at liberty. And I have seen it about 4 or 5 times in the last year. And this is not even your high net worth guys, this is your average taxpayer, where we're engaging SARS on behalf of the taxpayer on their personal affairs or possibly on behalf of their business. And SARS automatically picks up, okay, but you're related to this trust, that business, and that trust. Provide us full details. And because you've got to disclose that information in entirety, SARS can even go to the extent of piercing the corporate veil and including those trusts in any legal proceedings that may be implemented against the taxpayer, depending on the structure of the trust and the taxpayer being a trustee or beneficiary. It's similar to a company that is facing liquidation, where SARS are able to lay a claim via the courts. So, yes, your trust is not some sort of safe haven where your assets are completely excluded from anything that involves yourself in your personal capacity or another related entity.
So, Jashwin, what you're really saying is there's no hiding any longer. There's just no ways you could siphon money out of the country and possibly, invest it in other countries. Obviously, SARS do have ways and means of tracking you and your uh, all of your assets down and make you cough up and pay. Let me read this paragraph to you, and I'd like you to respond to that. The experts speculate that the main factor driving the closer look at millionaire wealth is the government's need for additional tax revenue to finance its social projects, such as the 350 Rand social relief grant, which is likely to become a fixed basic income grant in the future. And let me just add on to that. What about all of those tenderpreneurs? And I guess we find ourselves in this situation due to the state capture issues and the massive corruption that is still continuing by politicians and government officials in our country. That is the direct result of the situation we find ourselves in.
Yeah, look, Julie, if we were to venture into state capture and corruption, alleged fraud matters, etc., I think we could basically speak the entire morning. It's very rife in South Africa, but in essence, to answer your question, that is a possibility, and we must also remember there was a budget deficit, and there has been a budget deficit from a collections perspective for the last 2 or 3 years. Last 2 years, we can pin it on COVID very much. There was very much a almost almost a restriction in the economy, with lack of mobility and the level 4, level 5 lockdowns. We did see a massive economic impact, and the government as well as the country are still trying to recover from that, which may be why this proposal has now been given legs to an extent. Whereas in prior years, and talking many years back, it was very much speculation. And the grant is one of those things. The ever increasing unemployment rate in the country is another one of those things where this additional tax recovery from the very wealthy, it's going to cover some of those expenses to an extent. And if you recall from the budget speech this year, I mean, just our servicing of debt was costs was the third largest in third largest expenditure for
Mhm.
government. Next couple of years is probably going to be the second largest. The ratio is going to go 70, 75%. And that is something that has to be catered for. But what is not really being considered is, with the proposal of this wealth tax, we've already seen high net worths leaving just on the basis of proposal. So, should implementation actually come into play, be it now or a few years down the line, we're going to see a mass exodus of high net worth individuals. And that's twofold. One, because the taxpayer, and this is from very much from the taxpayer's perspective, the taxpayer feels, why should I work hard to accumulate wealth for myself and for my children when I'm in essence going to be punished for accumulating that wealth? That's one. And two, with these high net worth individuals leaving, the knock on impact is, you know what, these guys were here. Um, let's take a very compliant guy. He declared everything, he paid the due taxes on it. Now you want to impose an additional wealth tax, and you're proposing that you impose this wealth tax over and above his normal tax. He's already compliant, he's paying tax on his 5 properties and on his vehicle purchases for 20 million. He's paying his dues, he's compliant all senses, and now you want to impose an additional tax over and above. So, from the taxpayer's perspective, it's very much, why should I stay? Why should I stay and contribute to this country's tax base when I'm being penalized for working hard and accumulating my wealth and basically enjoying my money? The knock on effect is our tax base is going to be even further reduced from its current dismal figures when compared to the nation's populace. And that's going to put the government and the fiscus in an even deeper hole.
Absolutely. What I do want to add to what you've just shared with us now is the fact that, and you make a lot of sense about uh, the people in that band and the type of thinking. Why should I be working this hard, killing myself to enjoy? What I've worked really hard for, and the government's taking a huge chunk of that away from me in the form of taxes. Perhaps the government will be better advised to start, yes, doing intense investigations on the super rich to try and ascertain where their wealth comes from. And if it is through illegal activities, then those are the guys you go after. But if it is genuine old money and people that have really worked hard and there's no illegal dealings there, then you leave them well alone, because obviously they, in the interim, or have already, through their sheer hard work and the industries that they've put up, have created employment for a part of our population. So that's my suggestion, but I'm not sure if anyone's listening. So,
No, look, I mean,
it just makes common sense.
yeah, you're very much on the money there because these these high net worth guys, and let's talk about the guys with historic wealth or generational wealth, so to speak. These guys, their families have been around for hundreds of years. They've got farms, they've got shops, whatever the case may be. But that wealth typically comes from something entrepreneurial, to an extent. And by extension of that, they are creating employment, whether it's in the cities or in the rural communities, but through their entrepreneurial mindset, they're creating employment for 10, 20, 30, 40, some of the larger farms and some of the larger retail outlets, hundreds of people. People who would not have had employment should these high net worth individuals not have had the idea to actually start a particular venture. And with regards to your second point, with regards to those in-depth audits, that is a very separate discussion. It's happening. It's called a lifestyle audit. It is being done on ultra high net worths and people who have unexplained wealth, so to speak. But that again, it's a half a day discussion. We can delve into it. We can delve into how
And
SARS is composed, the criteria, etc.
okay, and that's where we're going to have to leave it. Maybe we should be looking at that in a future program. But wonderful having you on the show. Tax expert Jashwin Baijoo talking about a proposal that the wealth tax or the super rich are going to be further imposed with a wealth tax. So we're going to watch that very closely. Thank you indeed for your time. Nice talking with you. Have a great
Thank you so
day.
much, Julie.
8:38 exactly, news and views right here on Salam Media. Time for an ad break, and when we get back, we are going to be talking with Africa